Well, currency pairs like the euro versus US dollar, the sterling versus US dollar, dollar versus yen, seen sharp moves to the downside. The dollar versus Canada has seen more of a up and down price action. We started the day off gapping to the upside actually for the dollar, then fell down toward the closing levels from Friday's trade, only to bounce back and a trade sort of mid-range, near moving averages. I'm going to talk about the technicals for this currency pair. What's defining them? Where are the targets? Where are the risks? What are the bias changing levels in this video? So let's get started. All right, I would be remiss if I didn't draw the red box that has confined the trading range going all the way back to around December 17th. And in trading last week with all the volatility from the inauguration, we did have the buyers try to make a break to the upside, but they failed. And we had sellers trying to make a break to the downside, but they failed. And then we closed the week below these moving averages. This green line represents a 200-hour moving average. The blue line represents the 100-hour moving average. So staying below those levels was more bearish. We had this ceiling here near the 1.4348 level that sort of formed on Friday's trade, and that was a level that we needed to get to and through, along with the 100 and 200-hour moving average, to increase the bullish bias. So what happened? Well, the price did move higher initially in the trading day, and we broke and we gapped above the 100 and 200-hour moving average. That was more bullish. You can see how the dip price here found support buyers against that level until it did, and then the market fell below those levels. And then what did we see? We saw increased momentum to the downside that moved below that swing high level from Friday's trade near the 143.48 level. It goes back in time as well, and moved down to this swing level, which was a low price that came in on a Thursday's trade. And you can go back to this area right through here, where we also found swing lows forming a floor here before moving to the upside. So the inability to get below that level kind of gave the buyers a go ahead to push back to the upside. And what do? We came right back up to where the comfort is, near the 100 and 200-hour moving average. So what next? Well, this is the bias defining level. This is a barometer for bullish above, bearish below. If the price can move above the 200-hour moving average at 1.4375, that would be more bullish. If we stay below that level and move back below the 100-hour moving average, we're now trading in between those levels at 143.71. That would increase the bearish bias and have traders looking for this type of break, and ultimately make its way, if it goes that far, outside of this range right here, outside below the 38.2% retracement of the move up from the December low back down through here to the high price that we saw in January. So that's the target on the downside. On the top side, if we break above the 200-hour moving average, guess what? We're heading up toward, or we'd be looking toward up toward these levels with the break ultimately of the outside of the red box that takes price above 1.4466 and stays above this level this time. So that's my look at the dollar versus Canada. We're sitting right there at neutral levels, a 100 and 200-hour moving average. We'll see what happens from here. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.